In sickness or in health, is Roche Holdings a company you want to own? Today we're going to have a look at Roche, Roche Holdings formerly. It's a Swiss company, it's a pharmaceutical company, and it's done very well. Maybe the stock is off in the last couple of months, but overall this is a company I want you to look at for the fundamentals. What do I mean by the fundamentals? I'm talking about cash flow, I'm talking about net income, I'm talking about price-earnings ratio, I'm talking about all the tangible measurements of a common stock. Roche throws off a lot of cash, and for that reason, maybe it's a good one for you to own. We talk in dollar terms. Obviously, that's a Swiss company, so it earns and has its expenses in Swiss francs, but translated to dollars, about $28 a share. You can see here. The high reached into the 30s, so it's come off a little bit. What's the concern at Roche? They're not big concerns, but the concern is it relies entirely on the line of products generated by a company, a subsidiary called Genentech, which is in the oncology field. It treats cancer patients. Does it do it well? Yes, it does it very well. It's about 50% of its earnings. Well, who pays for Roche's billions? A lot of it's paid by the US government. Medicare Part B is the funder, in effect, of Roche, and that's why the company is able to drive so much cash through its business. What do I like about Roche? The PE, the price-earnings ratio, not the magic formula, but still a measurement whether you're paying too much or too little, is under 4.5. Could even be on the forward PE, could be 3. 3 times earnings, that's a steal. Especially, this is a company that generates a lot of cash, $15, $16 billion a year in cash flow. What do they do with that money? They're always reinvesting in new lines, in new pharmacy products, in essentially drugs. Have they been successful at it? Not entirely. They're winners. About half the business is in oncology. They've tried with cholesterol drugs, diabetes, other things, haven't been as successful. That said, they're investing $4 or $5 billion a year in new products. Do I think that that's going to be a winner? No, but the yield is almost 4%. The PE is about 3. The market cap is about $150 billion. They're in a field, cancer research, cancer drugs, that there's demand for it, where it's a population that gets older. The older the population gets, more risk there are for some of these horrible diseases. Is Roche then a company in your portfolio that you can do well with? If you're earning 4%, you haven't paid too much, you've got a steady management, you've got 10 years of a track record, you could do worse. Put it on your radar, do your own research, ask some of the people who understand these medicines better than I might, and give it a serious consideration. It's all the time we have this week on The Investment Advisor. I'm your host, Matthew Stevenson, in partnership with Dukascopy TV. Remember, money can take care of you, it cannot take care of itself.